Let's now invite our next guest. Anand Tandon is joining us on the show. Anand, hi, good afternoon. Thanks for joining us. I wanted your thoughts first on the IT stocks, Anand, because that's where the big debate is about, where they're headed from here, especially in terms of valuation. Your thoughts?
Well, Anuj, I actually maintain that these are small blips. Yes, there will be a question of margin pressure in the near term, maybe because of many of the companies have also increased the bench size quite significantly. And if there is any kind of slowdown, obviously it will percolate. But overall, I think, if you were not to buy IT or not have it as an equal weight in your portfolio, where would you allocate it? The only other segments that are likely to do well are, of course, the engineering and capital goods segment in India and perhaps the public sector banks. And after that, everything else is tactical. So, you mentioned, for example, consumer finance. Now we are getting into the season where consumer finance in the next quarter will probably be picking up. But on an overall annual basis, it is not going to, that is where most of the growth is going to come from. So if you were to look at building a portfolio, I think you would still, at least I would still be kind of equal weight on IT. There is no question that you are not going to get the same kind of performance as you got over the last few months.
Okay, all right. Hi, Anand. I'm not sure whether you track these names. Some of these rice-related stocks, LT Foods, Dawat that is, that spiked to the high point of the day. KRBL as well, the management has been sketchy in the past, but that one as well is doing pretty well. Any view on either of them, KRBL or LT Foods?
Well, most of the rice-related stuff really depends on the inventory you have. So, it's a little difficult unless you're tracking the inventory on a regular basis. As you're probably aware, the inventory value is what, you have to kind of, especially if it is basmati, you have to actually let it age. It's like wine. And then it depends on the kind of contracts that the companies have, and that is not easily revealed. So on an overall basis, if you have some understanding of where the inventory and contracts are, then you could perhaps buy them. I think they are too specific for a general portfolio to be looking at.
Okay, all right. What about tire-related stocks? Everyone's been focusing on the OEM. Some of these, auto ancillaries have been doing well. I think JK Tires, if I'm not mistaken, the stock was up 6-7% odd. As we speak, I think it's moved to the high point of the day. Rubber prices as well are cooling off. Anand, any view on some of these names?
Well, they are relatively cheaper compared to many of the other auto ancillaries. But I think if you were to look at a sustainable basis, this rubber price business again is a commodity price which you have to keep on tracking. And that always puts a kind of cap on where the tire stocks can go. The other problem has always been China, and of course, to some extent, that is now lower because of anti-dumping and so on. But even then, somehow, that is not a sector that has given you consistent performance bar a couple of companies. So if you are looking at auto ancillary space, my own preference would be to look for those which are going to be supplying to EV companies globally. And, there are quite a few companies there that could be fairly interesting, not necessarily just the commodity-based kind of stuff.
Okay, now Nifty, by the way, just scored a century intraday. If you look at the chart, there's clearly a bit of a surge which is on right now. SBI is the one which has led the last bit of move on the upside, along with ITC. ICICI Bank also doing quite well. So a lot of these names doing well. Anand, the word on SBI?
Well, it remains both the stocks that you mentioned, Anuj, SBI and ITC are a couple of my favorites. I think SBI has to be the key leader in terms of one of the largest contributor to the earnings for the current year. And I don't see any reason why even now it's not particularly expensive even now compared to the private sector. Among the public sector, there is no question it's the best company even in terms of its management capabilities and so on. Same goes for ITC. I think it's still relatively cheap among most of the FMCG players, has the best protected earnings growth possible. So again, both are good stocks to be looking at.
Okay, Anand, stay with us. We'll take a quick break here and come right back to you. 100 points, three-digit gains on the index, 17,591 is where we are at. See you on the other side with more specific stock talk.